Happy Friday to everybody. We had what we call an expectation breaker yesterday. And now let's take a look where we generally start with the crypto market. Came up here to 8,000, got some selling. I'm not sure if this was the US government putting into wallets, getting prepared to sell, but now we got a little sell-off, came up here, sold off some more, tried to move higher, pull back. Looks like we got a double top here, and then it's just kind of rolled over from there. So that is a story. We're just going to kind of watch this, and it needs to get above these levels to move higher. So that is a story with Bitcoin onto Ethereum. Kind of the same kind of model. It's going to follow Bitcoin for the most part. Got some selling here. We did have some buying earlier in the week when it got approved for an ETF, but it's just kind of rolled over from here. So let us go to our word of the day. Our word of the day is Skirr. Skirr move rapidly, especially with a whirring sound. Courtney watched the birds skirr into the sky after they were startled by her dog's bark. So that story there onto the S&P 500 heat map is going to be a big old chill map. The only thing up, Apple beat on earnings estimates. Google was down. Meta was up shortly, and then it turned tail. It is up a little bit after hours, so we'll continue to watch that. Amazon got torched almost 9%. Tesla's down. Almost everything is down. Pretty ugly day. Healthcare was up. Utilities were up. This is for professional money managers who have a mandate that they have to be in the market 95% of the time. This is where they're going to move. So healthcare plans, utilities, real estate, and consumer products are the area where they kind of move to. So that is the story on the S&P 500 heat map. If you're concerned if this is going to turn into a hard landing, well, maybe a little too late, but it's never too late if it continues to really torch down to the downturn. You can see moving your money here. Beats index investing. You never lose money. It only goes up when the market goes up. You can see beats index investing by quite a bit. And they're offering 25 to 45% bonuses in some locations. So if you want to learn more, you can send a comment. So there we go. And we go on to our charts. This is our stock of the day, Bright Horizons. It's up, earnings are up 38%. Stock is up 14%. Pretty big down day. Education looks like there's been a lot of money rotating into education. So Learn was another one of the educations that's been doing well. Did pull back to its 20-day moving average. That is what's happening there. Take a look at consumer discretionary. They were up 0.88%. Utilities were up 0.16%. Healthcare, pretty flat for the day. So those are the three best ETFs right now. IPO of the day. We don't really have one. Then I'm going to pause for a second, see if we do have one. So we do have one. DoorDash is our IPO of the day, up over 8%. Earnings came in at 14%, beating last quarter's EPS at this time last year. So that is a story there. That's our word of the day, ETF of the day, stock of the day, and our IPO of the day. So let's take a look what was moving. We have moved pretty much entirely to cash. We're going to wait till the storm blows over. Don't know how low this will go. Take a look what was moving up. Our stock of the day, Bright Horizons, number one. Rocket companies rocketed it up a little over 12% on 400% increase in earnings. Mercado Libre in Argentina was up a little over 10%. Nice little cup with a handle formation here. And then a base on base, bouncing off the 200-day moving average. Earnings were up 103%. Finally, Twilio. Twilio earnings up 61%, 11.71% up for the day. So that's a look there. And not much to report on. From that point, we said we sold pretty much everything and moved to cash. Let's take a look at some of the things that we did move to cash. Dutch Brothers continues to sell off. It did bounce back to 37.42. I think that was pretty much pretty close to where we sold it. We got Elf Beauty. Continued, it fell below the 200-day line, so that's when we cut that. Front Door, we closed out our position. It had pulled back a little bit. We wanted to close out our position with a profit. Other one that we had was Southern, another, we believe was 217% on the spread. We did the, I believe it was 82.5 to 85. Got up here to 87, so it was passed. So instead of rolling it over, we just decided to close that one out as well. Closed out Samsara. And APO, really, the financials just continues to dive. I believe we sold that yesterday, but it's not looking good as they missed their earnings projections down, missed it by earnings surprised by about 7%. So we can take a look at the dollar index. Big gap down in the dollar index. Let's see if we can pull up the other one that we had on the dollar index. We don't have it right here, so we're going to skip that for the moment. Copper miner bounces back. Look at the copper index, it's moving up. So it has filled the gap, and then now it's bouncing up as a positive sign. Tech actually pulls back. Southern Copper pulls back. Take a look at uranium. Just continues diving. We did sell Denison Mines yesterday. On this dive down, just continues moving down. At our bond yields, they continue to fall with recession worries. You think the Fed is behind the cards? They were behind when putting interest rates up, and now a lot of people feel they're behind on reducing interest rates. They're reducing them 0.25%. So some people think they should be 0.5%, is what the market is worried about. Take a look at the 20-year. Fell under 3%. Let's go back to the 10-year. It's definitely under 4%. Huge dive down 4.6% today. The VIX is the thing that is going to be moving on up. Look at that move on the VIX. It closed at 2339. It moved all the way up to 2966. That was an incredible move. Look at the S&P 500. A gap down on the unemployment numbers that came out, down 1.86 for the day. RSP, the equal weight in the S&P 500. Gap down below its 50-day and then it bounced back a little bit, 1.7%. Look at the NASDAQ. Gap down, continues moving, getting closer to the 200-day moving average, down 2.37%. The equal weight gap below its 200-day. That's not a good sign. Down 2.6%. IWM. Now, we said it hit our numbers. I believe it was 205, and it bounced after 205. This is the line that we kind of drew in the sand that we said it was going to fill that down, and it did. Just take a look at the low. Guess it didn't quite get to 205. It's 206.99. We'll see if we got a little bit of a bounce, but that's where we are with IWM. There's some talk that this is going to outperform moving forward. We'll have to wait and see. The Dow Jones pulls back to the 50-day, comes back a little bit. But here's a big concern that the Fed is behind the 8-ball. So that is kind of the story. And take a look at some of our sector funds in the S&P 500. Financials fall to the 50-day. Energy falls below the 200-day. Oil prices, big gap down in oil prices. Communications, AT&T, Google, Meta falls below it's like a triangulation, 10, 20, and 50-day moving average. Biotech falls to the 50-day and then bounces down 2.23%. Same on the IBB. It moved towards its 50-day, but tried to get back to the 20-day, down about 2%. This is the one that we sold a couple of days ago. Our profits right near the 20-day. And it bounced off the 50. SMH. Big gap down. Huge move on SMH, falling 5.45%. Just take a look at this one. The FANGs, they gap down 2.85%. You had the FANG U, you were really nowhere land. It was down almost 9% for the day. Building materials pulls below the 50, bounces back. Home builders, they sold below the 20 and then they're bouncing back there. Real estate held steady, up 0.07%. Utilities held steady as well, up 0.16%. Mining and metals. Wow, look at that. Must be a lot of the steel producers moving down quite a bit below the 200. So where Amazon was, huge gap down to the 200-day, tried to fight back. We got healthcare sold off to the 20 and then bounced back. Consumer cyclical. Well, this is actually up 0.88%. Procter & Gamble, Campbell Soup. Big move up there. Gap down was definitely has filled the gap. Here's Campbell Soup. Definitely has popped out of the pivot as the money rotates into this area. For retail, big gap down in retail as well. Banks, regional banks gap down. Gap down there. Take a look at solar. Gap down in solar as well. So you kind of get the picture. It's a pretty ugly day. Whether we continue going down, right now seems to get an intermediate correction, but all bear markets really start with an intermediate correction. Just don't know how far they'll go down. We're definitely working on the left side of a base here. Just have to see when it bottoms. It can come back up. So we believe in trend following. And right now the trend is down. The smart move would have been when we were about 9% above the 50-day, would have been to shorted it and just see how far it would go. This is typically when the markets sell off, when they get that far above the 50-day moving average. Kind of covered this on our Sunday show. So we got a gap up on the short, for short. The same thing on the S&P 500. Usually it's 6 to 7% above the 50-day. When it gets above the 50, weight starts to sell off. So that is the story there. That kind of wraps up. Tough last 2 days. It was an expectation breaker. We can just bring up the NASDAQ once more. We had a gap up here, but the danger is the volume wasn't that convincing. And then got the bad news the following day. Expectation breaker. We thought it would go through. Generally, you would think it'd clear the 50-day moving average, got up to the 50 and just turned tail. Had a weak volume in the morning, strong volume in the afternoon. And we just got stronger volume today. So typically, to get stronger volume, you think you're going to have at least 1 or 2 more days of selling before it settles down. Generally, if it comes up to the moving average, this is where it would fail. This is typically where people put on shorts. So that is our show for today. Look for our weekend wrap up on Sunday. Hope everybody has a great weekend. Sorry if people lost a lot of money. We'll be here to help make your money work harder than you do. We'll be looking for ways to make money in the future. And we will be back. This is Mornings with Michael for information and educational purposes only. It's your responsibility to do your own due diligence, find out what's right for you. In the meantime,